Welcome back to the Pro Ticker Podcast, your Thursday morning edition, covering major financial magazine headlines, everyone.
It's great to be back. And I have to say, this is a lot. The amount of news we're looking at today, busy, doesn't even begin to cover it.
Oh, absolutely not. It's one of those mornings where you check the terminal and you realize the whole world just shifted while we were asleep.
It really did.
It's a massive
Yeah.
news day. We've got stuff flooding in from Davos. Markets are just reacting violently everywhere. And honestly, some of these headlines feel like they were picked out of a hat.
It feels completely disjointed, doesn't it? But that's why we're here. We've pulled the key reporting from Bloomberg, from CNBC, Reuters, just to try and piece it all together.
So what's the theme, if you had to find one?
Volatility, pure and simple, but also just strangeness.
Strangeness is a good word for it. I mean, just look at what's on the docket today. We're talking about a geopolitical pivot involving Greenland. Yes, actual Greenland. That someone stopped a trade war cold.
And in doing so, probably saved the quarter for a lot of fund managers.
Right. Then we jump to a literal deep freeze, a violent squeeze in energy markets that's hitting the U.S. and Europe.
And sending prices to the moon.
Exactly. And then, as if that weren't enough, the AI chip war just entered a whole new chapter. We've got a huge IPO coming from Alibaba and a political firestorm brewing in Washington over NVIDIA.
It is a lot. But our mission today really is to connect these dots. We want to show you how geopolitics, whether it's land deals, tariffs, export bans, is basically rewriting the rules of global finance right now, in real time.
Okay, so let's dive right in with the one that had me doing the double take this morning. Segment 1, the Greenland pivot. Because the market whiplash on this was just severe.
It really would.
We were all bracing for a trade war, right? Trump was spreading 10% tariffs on Europe. Markets are getting defensive. And then, poof, the threat is gone.
That's the headline. CNBC's reporting Trump has completely walked back those threats. But the why is the fascinating part. It's not about economic data. It's because of a framework of a future deal concerning Greenland.
I feel like we've heard about Greenland before, the whole idea of buying it.
Yeah.
But this time it's a NATO thing?
It is. This is not just a real estate deal. According to the reports, Trump and the NATO Secretary General Mark Rutte, they reached an agreement. Trump's calling it a concept.
A concept.
Right. But the details are pretty specific. It's about a Golden Dome missile defense system, and here's the economic part: access to mineral resources on the island.
Okay, Golden Dome sounds like something from a movie.
Yeah.
But this is a huge defense project we're talking about, and the market just loved it.
Loved it is an understatement. The reaction was immediate. Before this, you had a Sell America trade going on. People were dumping U.S. assets, fearing a trade war.
Okay.
The second this news hit, that trade just completely flipped on its head. The Dow, the S&P, the NASDAQ, all of them shot up more than 1%.
Because that immediate uncertainty just vanished.
Precisely. And it wasn't just the U.S. Europe breathed a collective sigh of relief. The Stoxx 600 was up 1.34%. And if you dig into the data, the leaders were autos and healthcare stocks.
Which makes perfect sense. Those are the big exporters. They would have been hit the hardest by tariffs.
Exactly. So money just poured right back in. The ripple effect even hit Asia. South Korea's Kospi actually broke 5,000 for a moment there.
That's incredible. So a promise of a missile shield and some mining rights in the Arctic basically saved the global markets from a trade war.
In a nutshell, yes. And you can see it in the sentiment coming out of Davos. We have Connor Hillary, he's the co-CEO of JP Morgan Europe, telling CNBC this tougher European stance was actually good for business.
Good for business. Usually they hate this kind of friction.
They do, but his point was about clarity. Business hates uncertainty more than anything. He said resilience is the new priority. And you even have CEOs like Henrik Anderson from Vestas pushing back on Trump's other claims, saying, we build our turbines locally.
So they're learning to navigate this new landscape. But is it? I mean, is everything okay now? Is the fight over?
I wouldn't go that far. The reporting makes it clear this is a truce, not a peace treaty. European Council meetings are still going on. Trump's attending a Board of Peace ceremony. It just shows how transactional everything has become.
Transactional is the perfect word. Okay, let's pivot from that political heat to the literal cold. Well, we have to talk about the weather because it is freezing and is costing a fortune.
This story is hitting wallets immediately. We're seeing a crisis in the natural gas markets that is, frankly, more volatile than the stock market.
I saw this number in the Bloomberg report, and I thought it had to be a typo. U.S. front-month nat gas contracts on track for a weekly gain of over 70%.
70. 70. Not a typo. It is the biggest weekly jump since 1990. Prices are at their highest since 2022.
That kind of volatility is it's insane for a major commodity. How does that happen? It can't just be because it's cold.
It's a perfect storm, both literally and financially. So yes, you have this deep freeze across the US and Europe, which cranks up demand. But the price explosion, that's coming from something called a short squeeze.
Can you break that down for us? How does a short squeeze lead to a 70% spike?
Sure. So basically, a ton of hedge funds were betting on prices going down. They were short the market.
Expecting a mild winter.
Exactly. But when the cold snap hit, prices started ticking up, and those funds started losing a ton of money. To get out of their bets, they have to buy back the contracts they sold short.
Which creates a feedback loop.
A vicious one. Their buying drives the price up, which forces other short sellers to buy to cover their losses, which drives the price up even more. Bloomberg called it a violent squeeze. It's just mass panic buying.
And this isn't just a U.S. problem, is it? The sources mentioned a bidding war.
And this is where it gets really critical. Gas isn't just local anymore. It travels on ships as LNG. It's a global commodity. So right now you have a bidding war between the U.S. hub, which is Henry Hub, and the European hub, the TTF.
So Europe and the U.S. are literally fighting over the same ships full of gas.
Yes. And Asia, too. Stockpiles are low everywhere, so if you want that LNG tanker to turn around mid-ocean and come to your port, you have to pay up.
It's amazing. A cold snap in one place dries up heating bills on another continent. And speaking of energy policy, we have to talk about the U.S. Energy Secretary Chris Wright and his comments in Davos.
Right. His comments just add another layer of tension here. While Europe is scrambling for gas, Chris Wright is on stage arguing the world needs to double oil production.
Double, with all the climate talks going.
He was blunt. He called EU and California green energy policies inefficient. He's even talking about revitalizing Venezuela's oil sector. It's this huge philosophical clash.
So one side is saying transition at all costs, and the other is saying drill at all costs.
And the market is caught right in the middle.
All right, let's pivot from energy to the other commodity that's, running the world. Silicon. The chip war. And this is a two-parter today. Major moves in China, major fights in Washington.
Let's start with China. The big news here is all about Alibaba.
Right, Alibaba. I think of them as an e-commerce giant, but now they're planning an IPO for their chip-making unit, T-Head.
That's the one, T-Head or Pingtuj. Bloomberg says they're restructuring it as an employee-owned business first, and then they're looking at a public listing.
Any idea what it's worth? And why now?
The valuation is still a bit of a mystery, but for context, their rival, Cambricon, is valued around $80 billion. So this is huge. The why is about two things: capital and sovereignty.
Sovereignty. That's a strong word for a tech company.
I think it's the right word. Beijing is pushing like crazy to create its own alternatives to U.S. tech, specifically to NVIDIA. Alibaba has pledged $53 billion to AI infrastructure.
$53 billion?
Right. So by spinning off T-Head, they can raise even more money and get the talent they need to build their own chips. They want to reduce their reliance on the U.S.
And these chips are actually being used.
Oh yeah, China Unicom is already deploying them. This is China trying to build its own NVIDIA before the U.S. export bans choke them off entirely.
Which makes sense. But that brings us to the other side of this. While China is trying to build its own chips, Washington is basically fighting with itself over whether we should sell them our chips.
And this is where the story gets really complicated. It's a fascinating look at the internal conflict in U.S. policy.
So let me get this straight. The Trump administration is reportedly planning to let NVIDIA sell its really powerful H100 chips to China. But the U.S. government wants a 25% cut.
It's that transactional approach again, isn't it? It's like a tax. You can sell them the tech, but we get a piece of the action. And the H200 is a monster chip for AI. But this idea has created a huge backlash in Congress.
Yeah, I saw this AI Overwatch Act in the CNBC report. What's that about?
It's a bill proposed by Republicans, Representatives Mast and Molinar. They want to block these sales completely. Their argument, and this is a quote, is that NVIDIA is trying to sell the cutting edge of warfare to Chinese military companies like Alibaba and Tencent.
Wow. Calling Alibaba a military company? That really raises the stakes.
It frames it as national security, not trade. But on the other side, you have tech investors like David Sachs who argue that if we don't sell, we just hurt our own tech dominance. NVIDIA needs that China revenue to fund its R&D.
It's that classic debate. But here's the twist that I found just ironic. The reports say Chinese regulators are blocking some of these NVIDIA chips anyway.
That's the ultimate irony, isn't it? Reuters is reporting that Chinese customs are actually being told to block imports of these specific chips.
Wait. So Washington is arguing about letting them in, while Beijing is stopping them at the border.
Exactly. The theory is that Beijing is forcing domestic adoption. They want their companies to buy from T-Head and Cambricon, not from NVIDIA. They're playing the long game.
Unbelievable. So while Washington argues over letting them buy, Beijing might just be saying no thank you to help its own team.
It shows you how serious both sides are about this. It's not about next quarter, it's about the next decade.
Absolutely. Okay, so speaking of the next decade, let's talk about money, personal wealth,
Yeah.
the labor market. Because we have some really contradictory signals coming out of Davos.
This was a huge theme. And you have Jensen Huang, NVIDIA's CEO, making a prediction about jobs that I think will surprise a lot of people.
This is the one that really caught my eye. He says the AI boom will create six-figure salaries for blue-collar skilled trades.
Yes. For builders, electricians, plumbers,
Not coders.
not coders.
Yep.
His point is, we're in the middle of the biggest infrastructure build-out in history. Someone has to physically build the data centers. AI can write code, but it can't weld a pipe or run electrical conduit.
That's a fantastic point. ChatGPT is not going to install your server farm's cooling system.
Precisely. And Microsoft Research actually backs this up. Their data shows physical jobs are the least likely to be automated. Meanwhile, AI was linked to about 55,000 white-collar layoffs last year.
So it's flipping. The safe office job is getting risky, and the hard manual job is becoming a high-paying career.
It's a huge shift. But while that's happening in the labor market, you have to look at what the billionaires are doing with their capital, because Ray Dalio had some pretty sobering things to say.
Yeah, the Bridgewater founder. He's always someone to listen to on macro trends. He sees diversification away from U.S. assets.
Away from the U.S., even with the market at all-time highs.
But why? We just talked about that huge rally.
That's the paradox. He points to gold being up 67%. He says that's not normal. That's central banks around the world buying gold to get away from currencies, specifically the dollar. They see the U.S. debt, the political volatility, and they're hedging.
And it wasn't just gold, was it? Something about Danish pension funds.
Yes, a major Danish pension fund announced they're selling U.S. treasuries. They cited credit risks and political volatility. When a conservative pension fund says U.S. debt is too risky, that's a huge red flag.
That ties everything together, doesn't it? The Greenland deal, the tariffs, all that volatility is making the safe money really nervous.
It is. The rally we saw is the short-term sugar high. Great, no tariffs today. But Dalio and the pension funds are looking at the long term and saying the structural risks are getting much, much higher.
A split-screen world.
Yeah.
Stocks are up, but long-term confidence is down.
It's a very dangerous mix if you're not paying close attention.
Well, let's try to sum this up. We are living in a world where a missile defense deal over Greenland moves the stock market by a full percent,
Where?
or a cold snap causes a 70% spike in gas prices, where plumbers might soon out-earn coders, and where the U.S. government is fighting itself over selling chips that the other side might not even want to buy.
It's a chaotic landscape, and if I could just leave our listeners with one final thought, it would be this idea of capital wars. Ray Dalio hinted at it. If central banks are quietly shifting away from the dollar, while at the same time the U.S. is using trade access to get land deals like Greenland, are we entering a new era where economic alliances matter more than military ones? We used to secure alliances with army bases. Now it seems we do it with tariffs, with debt, with chip exports. And if capital is the new primary weapon, then the volatility we saw this week, that might just be the opening shot.
That is definitely something to think about. We'll see you all tomorrow morning with new headlines from major financial magazines.